Thanks so much. Well, it is Wednesday, and that means it's time to talk to our financial guru here, Jeff Ivory, about what's going on in the money world. And Jeff, when we think about the economy and we think about the stock markets, you would think that they would probably be a little parallel with each other, but right now it doesn't seem so aligned.
No, in fact, that's actually a regular misconception that the stock market and the economy have anything to do with each other sometimes. And this is a great example of that, Sima. Certainly over the last couple of days, we've seen the stock market pull back significantly. And, you know, earnings season is here. And earnings season is kind of like Halloween. You just never know what you're going to get in the bag. And so right now, we've got 60% of earnings that have missed. And I think it's put a little caution into the stock market as it relates to the fundamentals, the underlying economic data that people are looking at, and the separation that it seems the stock market has had this year versus that data. So, give you a couple of examples. The United States. Right now, we've got 16 trillion in debt. It squeezes out private market investment. We've got a weak and uncertain labor market. That's never good for an economy. We still have a weak housing market. Even though we've seen some improvement, you still don't see a lot of new builds going up, and houses are still struggling. And then finally, this contentious political environment that we haven't seen any relief from that. And they have what they call the fiscal cliff coming at the end of the year. For us normal people out here in the real world, the fiscal cliff's probably not a big deal. But for those people that do what I do for a living, look at financial and economic numbers, the fiscal cliff is a big deal.
Why don't we talk a little bit about what's going on internationally and how that affects the U.S. economy and/or stock markets? You want to start with Europe?
Yeah, I think that's a great place. So, and when we're going to start with Europe, let's start with Spain. 25-year-olds have almost 50% unemployment in Spain right now. In fact, Catalonia, the largest province in Spain, is actually trying to secede from Spain. So the economic data there is very challenging. And if we swing from Spain even over to Germany, the stalwart partner of the European Union, Germany actually appears to be entering its own recession, which by itself, it could survive comfortably. Recessions are normal facts of business life and economics. However, with all the southern countries that are having to export to Germany at a time when Germany's not buying as much, the pressure it could put on those countries would be extreme. And if you're going to talk about Europe, we might as well swing all the way over back to China and talk a little bit about the turbocharger that was the economic engine over the last 5-6 years, and that turbocharger's been slowing down a little bit. And we've got slowing growth in China. People in my industry, the economists, are talking about a hard landing versus a soft landing. In English, that means, is it going to be really, really bad, or is it just going to be partially bad, and for how long, right? And then there's issues right now with China as it relates to intellectual property and as it relates to the honesty and integrity of the information that's coming out of the financial systems. If there's one thing we've learned back from 2000 with Enron and WorldCom, it's that if you don't have clear, concise, honest information, your investments become much more at risk, and it becomes very scary in that world. So I think today's a good day to reflect on the stock market where it is, and I think today's a great day to take a step back, deep breath, and maybe look back at the fundamentals to decide what you want to do with the investments.
All right, thank you so much, Jeff Ivory. If you missed any parts of this interview, go to cbsdetroit.com later today for it.